Imagine a hyper-advanced tech startup, right? Building the cities of tomorrow.
Okay.
They operate completely independently, writing all their own rules, but there is a catch. They still plug their servers into the old traditional power grid.
Oh, I see where you're going with this.
Right. So when that old grid has a massive blackout, the startup screens just go totally dark too.
Yeah, and that is exactly the kind of blackout the crypto market is experiencing right now. I mean, the traditional power grid, which is the US dollar and traditional equities, is struggling. And it is pulling the supposedly independent crypto ecosystem right down with it.
Welcome to today's deep dive. We are unpacking the Vantage Plus weekly crypto analysis, which was published on Monday, May 18, 2026.
Yeah, it is a really revealing report.
It really is. We are exploring why the recent positive market sentiment is, well, suddenly fading. We'll look at the broader market overview and dig into the hard technical analysis for Bitcoin, Ethereum, Ripple, and Solana.
So you can understand exactly where your portfolio might be heading.
Exactly. So let's start with that power grid analogy. For a long time, the narrative was that crypto was just, its own isolated island.
Right, the whole decoupled theory. But the Vantage Plus report paints a very different picture of the macro environment. We are seeing a surging US dollar putting intense pressure on all markets.
Wow, all markets.
Yeah, literally everything.
Huh?
Even traditional safe havens like gold closed in the red last week. And that uncertainty is causing traditional stock markets to drop, which triggers profit-taking and liquidations in crypto.
But wait, how does a drop in Wall Street tech stocks physically force a drop in a decentralized token? Are people just panicking?
Well, no, it is actually about institutional margin calls. When large institutional investors start losing money in the traditional stock market, they need cash fast to cover those holes.
Right.
So to get that cash, they are forced to liquidate their most profitable, highly liquid assets. Very often that means cashing out their crypto holdings.
So the drop in traditional finance mechanically triggers these massive sell-offs. It is not necessarily because people lost faith in blockchain technology.
Exactly. It is just big money needing liquidity. And that institutional drain is hitting the biggest tokens the hardest.
Which brings us to the heavyweights. Looking at Bitcoin, it is trading around 78,386 stux right now, and the report says it recently fell back below its resistance zone.
Yeah, that resistance zone is essentially a historical price ceiling. It is where sellers usually overpower buyers. For Bitcoin, that critical ceiling is now $81,500.
But it is dropping, so where is the floor?
That is the scary part. If it breaks below the $75,000 support level, the bearish sentiment is just going to multiply.
And Ethereum is following suit, right? It is trading at $2,191, and the analysis points out it just broke below its 50-day moving average.
Right, which usually acts as a historical support zone. If Ethereum drops through its rising blue support level on the charts, the report says that the psychological $2,000 mark is the next stop.
Let me challenge this a bit, though. Why are we so obsessed with round psychological numbers, like $75,000 for Bitcoin or $2,000 for Ethereum?
Is a good question.
I mean, are these just self-fulfilling prophecies driven by human panic rather than the actual underlying technology?
Actually, it is far more mechanical than just human anxiety. You have institutional trading algorithms, the bots executing thousands of trades a second, and they're explicitly programmed to use those clean, round numbers.
Oh, wow. Wait, really?
Yeah. If an algorithm is set to automatically dump assets, the exact millisecond Ethereum hits $1,999 to prevent further losses, well, hitting that psychological floor literally triggers a programmatic cascade of selling.
The prophecy fulfills itself through code.
Exactly.
So if the heavyweights are being dragged down by these automated institutional sell-offs, you would assume the smaller altcoins are already getting completely crushed.
You would think so, yeah.
Yeah.
But surprisingly, the data shows that specific news and individual token vulnerabilities can completely override the macro blackout.
Right, the outliers. Ripple, or XRP, is the prime example here. It is trading at 1.41999s, and it is actually pushing higher.
Yeah, XRP is insulated from the broader market drag right now. And that is because of the Digital Asset Market Clarity Act that just advanced through the Senate Banking Committee.
That legislative shield is fascinating. It provides a clear regulatory framework, right?
Right. It essentially classifies the token in a way that protects it from arbitrary SEC fines. That gives institutional money the legal green light to invest without fear of surprise lawsuits.
Which is why XRP is currently bottlenecked, trading sideways between $1.3 thousand and $1.5 thousand. It is just holding its breath, waiting for Congress to pass the act.
Exactly. If it passes, institutional money could flood in. But then you look at the opposite end of the spectrum, which is Solana.
Yeah, Solana's trading at $86.66, and the report flags it as the most vulnerable token on the board right now.
Totally. It lacks any of that legislative armor XRP has. It attempted a rally, but completely lacked upside momentum.
So if it drops further,
It is teetering on a critical support mark. If it breaks below $80, a major slide is definitely on the cards. It just has no news catalyst to distract from the broader market downturn.
it really highlights the paradox of modern crypto.
Yeah.
For years, the community begged for mass adoption and institutional money.
Oh, yeah. They wanted Wall Street's billions.
Right. But to get those billions, crypto had to let Wall Street into the ecosystem. And now that very institutional money is exactly what permanently tethered these tokens to the traditional stock market.
The market they were originally supposed to replace. The traditional market drives the ship now, unless a specific token manages to build its own regulatory lifeboat.
Which leaves you with a pretty heavy question to consider as we wrap up. Bitcoin was originally created to be an alternative system, right? Completely uncorrelated to traditional finance.
Right, that was the whole dream.
But if a strong US dollar and falling stock markets are now dictating Bitcoin's price, has crypto entirely lost its original purpose? Definitely something for you to ponder the next time you check your portfolio.